talking a little bit about energy. Maybe we can energize the markets just a little bit. It seems like we need it. Selling off just a little bit across the board today. We'll be taking a look at a few key ideas on what's happening in the markets in general, and then diving deeper into each sector and specifically focusing on energy as we look into what drives this sector, what are the opportunities that exist within it, some of the high and low performers over the course of the last several months, and seeing where we might be looking in the near future. So thank you for joining with me. As a solo session, I love this, an opportunity to share with you many of my own individual research projects. I also have a chance to address questions, but I do have to wait until we get to the end of the session. So we'll run the full 30 minutes looking through charts, information, and history, and then I will answer as many questions as I can thereafter. So do go ahead and send in your questions. Try and be specific what it was I was talking about when you asked the question, in case it's hard for me to remember based on the context, but I will be excited to answer those questions right at the tail end of the session. Welcome back. Thank you for being with me. As always, let's go ahead and start off by jumping over and taking a look at the S&P 500 chart so we can understand in broad terms where the market is. We are only 3 or 4 trading sessions off from all-time highs. If we go ahead and take a look, all-time highs was this big red bar that's marked here on May 23rd. Folks, that happened to have been my birthday. I seem to have fouled things up for the market. Came down quite a bit, and as we look just a couple days later, here we are a little bit lower than the highs, but still above the lows from that May 23rd date, at least trying to hold on at that point. Well, that also puts us in suspicious correlation with this uptrend line I've been eyeing for several months. We take a look, it came after the November gap, pinning off of the January 17th pivot point, and we look and see how the market got back above, held in on May 23rd. It did bottom out right at that line. That's where we're trading at today. If we end up breaking below it, who knows where we may go next. But as one possible area to look at, I would encourage you to think about it in these terms. The exact same time frames here on our chart, but now with our moving averages, with the 5 pointing downwards, the current price below that black 5-day simple moving average. It does look, in my opinion, just a little bit more bearish than it did as we were looking at the simple chart with the one positive trend line. If we end up continuing downwards, I wouldn't be surprised if we found our way very quickly to this 20-day simple moving average, right now found at 52.33. But as we take a look, right now at 52.33, yesterday at 52.21, the day before at 52.12. In other words, we're going up by 9 or 10 S&P 500 points per day. Tomorrow, it would be something like 52.40 or so. That's going to be right within striking distance, even of a modest sell-off like the one that we have experienced thus far today. We'll see where we end out, but certainly that would be an area of focus if we end up in this negative trajectory, the 20-day simple moving average, that key area. If that breaks, the 50 is our next line of defense, right around here, coming close to 5,200. Each day, it is still moving positive. It's moving in that direction, but at a slow rate. It will be at about 51.82 or 83, depending where we are tomorrow. But as we take a look, those are the things that we're thinking about in terms of the market as a whole. Very near to the all-time highs, but still flattening out. It's been a while since we've made some substantial positive progress, and so we're starting to see some things flatten out in terms of our trend trajectory. Our focus today is going to be on the energy sector. So let's take a look at all the sectors as a whole, understanding where we are moving. I'd like to start that by just showing an update on what's happening today. Folks, take a look. We are getting across the board, every single sector red. This is a watch list that the strategy desk put together of each of the ETFs that track a sector within the S&P 500, as well as SPY for the index as a whole. you're welcome to follow suit and do the same thing. It makes it an easy way for you to check in on the sector performance. But in this case, we notice that our area of focus, energy, is the worst performer on the day, down 1.8%. We'll take a look at some of the drivers there, some of the good, some of the bad. We also notice over here to the side, XLU at 1.5% down, utilities losing some of its luster with which it has been outperforming the markets. We'll take a look at how that puts us overall here in just a moment. But knowing that today's performance is off across the board, no real standout to the positive, let's go ahead and take a look at some of our updates in terms of our sectors. Each and every week, we've been taking a look at a chart just like this, which shows the same idea as that daily dashboard, giving us performance, but now we can do it over different time frames. In this case, we're looking at a month-to-date view. Month-to-date is what you have in front of you, and we can see that month-to-date, there is one shining star, and that is information technology, over 12% positive, not quite 13, but if we included dividends, perhaps that would push it higher. Infotech doesn't get a lot of dividends, but nonetheless, 13% or so up for the month. Compared to the S&P 500's 5% currently up for the month of May, we can see that information technology clearly doing its part. When we count and see that communication services and utilities are the only other two sectors positive in relative performance to the S&P 500, we have a substantial impact coming through from these two, the largest of the sectors out there. Weakening the market is energy, our focus for today, and we see the rest have almost come right back here to flat on the month. That's not good news, especially when we look at this in context and remember that this is what we were seeing in the month of April. April, all 11 sectors, save utilities, were negative. Everything falling below our 0% line and the S&P off 4%. Negative for everything. Not too long ago, we were seeing almost everything positive for the month of May. Now we've got almost everything positive. Energy still negative, but almost everything positive, even though several are right here back to flat, less than 1% positive as of this morning, about an hour ago when I pulled those prices. So substantial price movements that have changed and moved things around on us in this case. Here is our year-to-date look going back to the start of the year. What does that amount to? Well, we're seeing still real estate in the lower portion, down still 8% or so for the year. It does tend to pay a little bit larger dividend, so refactoring that in, maybe we're only off 5 or 6%, but nonetheless, real estate is the sole negative sector for the year on a strictly price performance basis. And the S&P 500 currently mounting over 10% positive, even though we've come back just a little from that all-time intraday high on May 23rd, nonetheless, still 10+% positive for the S&P 500. And that comes mostly from information technology, mostly because information technology is substantially larger than communication services, but these two sectors being the largest contributors in a positive way to the S&P 500 performance. Utilities doing its fair share in holding up the S&P 500 as well, matching it's about 10% positive. But if I flip back over to our monthly view, we notice that utilities is up almost 6% this month alone. In other words, almost all of its positivity for the year has come right now, just recently. Think about that same idea for information technology at 12 and communication services at just less than 8. When we come back to our year-to-date chart, we see information technology, yes, 12% positive is meaningful, but it has also added an additional 8% prior to the month of May. Communication services, really, this month has not been its standout, but in several previous months, it really shined, specifically January and February, even into March. Communication services doing quite well and over 20% positive for the year so far. With a look at all the sectors, it's time for us to start focusing in a little bit more on our specifics, So let's go ahead and move next into our relative rotation graphs. So let me go ahead and pull these up for us and show the relative rotation. Those of you who this happens to be new for should notice that there are 4 quadrants on the board. We have improving, leading, weakening, and lagging. And depending where this dot happens to be, tells us a little bit about the relative performance of that sector against the others. And especially since the labels on these are a little bit different than what we usually see, here is a little key for us to refer back to. I think that shouldn't cover up too much that we want to see. There we go. Here we go. So we can see that on the right-hand side, utilities had been and was for some time a leader. It lived over here on this right-hand side, but it has started to weaken, losing a little bit of its gusto, being replaced in the leaderboard by IXT, which we look and see is the technology sector. However, on the far left-hand side of our screen, we notice energy still lagging, but it has found its way into this positive rotation. Putting these 3 directions together, we see it tends to go to the right, down, to the left, and up in this kind of semicircular or elliptical motion is kind of the general expected movement of these over time, that they will tend to improve and lead, then weaken and lag up and down over the course of time. However, energy has sort of lost its course and lagged just a little bit further on a relative strength ratio, whereas it has gained some positive momentum over the course of the last week and a half or so. Each of the previous dots on here represents 1 day. And this comes to us as of yesterday's closing values from relativerotationgraph.com, where you can go and get a copy of this for free yourself if you choose to create a free account from this third-party website, which is unaffiliated with Fidelity. As we take a look, other areas of note, we see IXY, consumer discretionary, losing a bit of steam. It is the next largest mover on the course of this board. IXR, which is consumer staples, also moving from weakening now into lagging. But we've got quite a few laggards showing up. The only one trying for a move up here into the improving is IXC, the communication services sector. We're going to focus in on energy today. That's going to be our main focus. As we do, here's going to be our next zooming in look. We're going to jump over and take a look at the heat maps that I custom build for the class each and every week. This is based on what's happening across the markets over the last 4 weeks. The brighter the color, the more extreme the movement, positive or negative. So these bright red spots down here were off and off by a lot. Starbucks losing 12% over the course of the last month. Even here in a very positive sector, we see SWKS off 14%, as is QRVO, losing quite a bit in those small sectors, but meanwhile, NVIDIA adds 31%, Microsoft up 10%, Apple 11%, Meta 11%, Costco 12%, Walmart 9.5%. A lot of positivity showing up over the course of the last month. But if we zoom into the energy sector, we see it hasn't been quite so rosy, nor so extreme to the negative, rather somewhere in between. WMB 6% positive, with the largest in the sector, ExxonMobil down 2.9%. Chevron off 1.4 and ConocoPhillips off 5.3. Again, note that this is as of yesterday's close. It does not include today's, which is significant for ConocoPhillips. We'll take a look at why here in just a moment if you are unfamiliar. But importantly, we notice ConocoPhillips is down pretty substantially. If we zoom in and think about just the last week, again, here we're looking at it across the board. NVIDIA, for those of you who are interested, added some $450 billion to its market capitalization over the course of the last week. That's just from the price rising substantially post earnings over the course of the last week. That's just since we did this same class 1 week ago. Huge increase for Nvidia, and does put it at least in striking distance. And depending on what data source you refer to, notice that Nvidia says 2.8T there next to it in its little pop-up here to the side. 2.8T, $2.8 trillion. Microsoft at 3.2. Apple at 2.9 trillion. In other words, Nvidia is right here within striking distance of becoming the second largest publicly traded corporation. Huge increase in its value relative to much of the rest of the market over the course of the last year. Whether or not that can hold on or not is still to be seen, but certainly this week it has continued moving in that same direction. If we dive into energy, we see, like we saw in the 4-week performance, not nearly as many standouts in an extreme magnitude, but Schlumberger, or Schlumberger, depending how you like to say it, off 3.5%, Exxon off 2.5%. The only positives here are MPC at 1.5% positive, Valero at 0.7%, and then a couple other almost positive, almost flat down here towards the bottom. Let's go ahead and dive in now a little bit deeper and learn a bit about what's happening here for this sector as a whole. Yes, we're selling off a little bit here in energy. It's been weak relative to some of the other parts of the market, but is that typical for this time of the month? This time of the year? Here is our seasonality look. Going back to 2013, the trend has been largely negative for energy traders, going from $80 per share or so down to as low as $40 per share in some of the absolute dearth of travel and lockdowns during COVID. That brought the price down substantially here for energy companies. But ever since then, starting in late 2020 and into 2021, 2022, it saw a resurgence of notable strength, going from 40 or so, now finding its way back up to these 80s or so that it took a decade to sell off, only a few years to now recover. So is this a good part of the year, a bad part of the year? We are now handily into the month of May and almost into June, and we see that is the most extreme positive point on our seasonality chart. Note that 0 is right here in the middle, and ever since April, we've been well above that in terms of impact on the trend. We have a generally positive trend long-term for XLE, also a positive impact from this time of the year historically based on the last 13 years of data. What areas are weak? Well, right before that, it turns out in early March does have a substantial decrease. We do note that this includes a huge spike downwards in oil futures from several years back when they actually went negative for a short period of time. But nonetheless, as we think through this and look at what's happening, only a small amount of impact to the overall trend. Next in our lineup is going to be looking through the sector screener itself, which we put together for you, and looks like that one got closed out. So let me reopen it. Juggling all of these screens is a bit much here, folks, for me, but here is the right one for us. Okay, so this is our updated sector screener showing us what's happening from it. I build this again myself. You can see this is done in Excel. I download the data from Fidelity's stock screener and then slice it up to serve to you in this format. I will be going over how to build this yourself for those of you who are curious and maybe missed out or want a review from when I did that last time. That's a few weeks away, 3.5 weeks away. It's going to be on Monday. I believe it's a Monday, but June 24th at 2:30 p.m. is what I've got in my notes. Let me confirm that I'm reading that correctly. Yes, June 24th at 2:30 p.m. Feel free to register for that session. It should now be listed on the website, so you're welcome to go ahead and register at this point, and I'll look forward to seeing you there if you would be interested in building this yourself and having it to refer to at a moment's notice. Energy only represents 3.7% of the market as a whole, with 22 stocks making up the sector within the S&P 500 top 500 stocks. There's actually about 504 stocks in the S&P 500 right now because of duplicate entries like Google being there with GOOGL as well as GOOG. So using the 500 largest companies, now we've got 22 energy stocks and a weighted average dividend here at 3.3%. We notice that there is one sector that outdoes it in terms of dividends, and that's the real estate sector. But energy is the next highest average dividend payer over the course of its sector basis. And as we look at the PE ratio, the price to earnings ratio, we find that energy is actually the lowest price to earnings ratio sector, both in a looking backwards way. In other words, how much am I paying for last year's earnings, assuming they stayed flat? 14. Whereas looking forward, expecting any type of earnings growth, that may now represent only 11 times earnings. That is by far the lowest on both the looking back and looking forward metrics. Energy has a very low price to earnings ratio presently, and that tends to be the case. Why would that be the case? Why? Ask yourselves, why would you demand to pay only 12 times earnings, whereas for an energy company, whereas you might be willing to pay almost 30 times for either a communication and consumer services, consumer discretionary company or an information technology company, each of them at almost 30 times, or down here in real estate, some going for as much as 40 times earnings. The answer is the perceived risk involved in energy. If we perceive the risk to be high, we will have a lower tolerance for paying high values. It also comes from an expectation of relatively small changes in the overall earnings and high risk as a result of geopolitical and governmental interventions. That's what's going on here in the energy sector. But when we dive even a hair deeper, we see that in this case, there are only two industries subdivided between this energy. And here we talk about what we mentioned last time we went through this. Energy does not include the so-called green energy that has been doing somewhat well over the course of the last several years, ever since the Democratic Party took control of the White House. That resulted in a pretty strong move higher for green energy. You can think solar, you can think wind energy, even some hydroelectric and geothermal. But as we think through each of those renewable energy formats, they are notably absent in the energy sector. It turns out energy, we're talking about instead oil, gas, and consumable fuels, as well as the equipment and services for the oil, gas, and consumable fuels. Like we mentioned previously, and we've looked at it in a couple other sessions, we would have to look around in a few different sectors to find those green energy areas. For example, under utilities, we would find a few independent power and renewable electricity. We also find under I believe it was under industrials, we will also find here a couple related. Which one is it here? Electrical equipment also has a few of those as well. So if we go ahead and bring this back over to our energy sector, the key is that over here, we are seeing that almost all of the market capitalization for this relatively small sector in and of itself comes from the oil, gas, and consumable fuels industry. And as we look, what has its performance been recently? Well, the last month, not so positive, but on a year-to-date basis, looking at price and price alone, 11%. But thanks to that rally that started in really late 2020, early 2021, it's had a 3-year annualized total return. So this does include dividends for the industry, oil, gas, and consumable fuels. That is far above the S&P 500 as a whole. It's done really quite impressive, and even energy equipment and services at 17% positive is well worth a thought in terms of whether it's worth allocating funds here. As we take a look, here's the number of companies involved in each. There's only 3 in equipment, energy equipment and services, and the remainder all falling here under oil, gas, and consumable fuels. Large amount of companies, and some of these are the big dogs on campus. ExxonMobil, we've got Chevron, we've got ConocoPhillips. We've only got 5 minutes left, and I definitely want to leave time to talk about some key items, especially about this ConocoPhillips, but I also wanted to go ahead and show what's happening in terms of oil, because that's such a heavy emphasis for this specific sector. So here is a chart of oil futures. This is looking at the WTI, the US-based oil. And as we look, it's been on a pretty strong positive movement. This is a 6-month chart, and it's been moving pretty strongly positive in February, in March, even into April. But come May, things changed for the oil prices. They had been rising, got almost up to $87 per barrel. Then we see things start to shift. Our highs no longer getting higher, rather getting consistently lower. Same with our lows until, this is why I decided to jump the calendar around, jumble it up a little bit, and go with energy today, because we're starting to see this breakout in oil prices to the positive, maybe enough to start eroding the strength of this downtrend. It came off just a little bit today compared to where it was, but it is notable that it is breaking out of this downwards trajectory. If it can get back north of $80 per barrel, it may be that we start seeing a new bullish trend in oil prices for the summer months with extra travel going on across the world. We will see whether that holds out to be positive for the sector as a whole, or whether or not it even materializes. But I did want to make sure it was brought to your attention that we are currently looking at a change or potential change in the tides in terms of oil pricing in the current values. This is using the July 4th contract as the next major monthly contract to expire after the June. We look at this in general, looking for one that's about 30 days till expiration to give us a good look back. But it is worth noting, this is not the price of oil itself, but rather the price of a futures contract traded on oil. If you're not familiar with futures, you can pretend with me that it's oil, even though it is technically a derivative product of oil prices. Here we go and take a look at this next. We want to go ahead and jump in and take a look at a few of the charts. We already looked at the S&P 500. Now it's time to take a look at XLE, the energy chart. We're going to focus on just my simplified chart with only a few lines drawn in. Strong upwards trend, breaks, and starts moving downwards. This looks awfully similar to me, like the price of oil. Strong upwards, then breaks downwards, but you note that the prices of oil companies does not yet reflect that potential break higher outside of this trend. If oil holds and moves higher, expect the oil companies to move in that same direction. However, if instead it is the companies that are being priced appropriately and oil inappropriately, oil may have to swing downwards to straighten out this general correlation. We'll go ahead and jump over and take a look at just 2 companies today, specifically ConocoPhillips, one of the largest 3 in the oil, gas, and consumable fuels. ConocoPhillips, a major player. Maybe many of you have filled up your car at a Conoco or a Phillips 66 station. But notice that today it is just taking an absolute dive, continuing its downwards trajectory. Well, it was announced this morning that ConocoPhillips expects to get a $500 billion improvement in its value. I'm sorry, $500 million in terms of its expenses as a result of a merger going on announced with MRO. MRO will be the subject of the acquisition, and you can see it is moving in the opposite direction. It went the same way with the rest of the energy sector, up and down, but now has this huge price increase. It's expected that MRO shareholders will receive instead shares of ConocoPhillips in exchange if this merger goes through. It's a relatively large merger, $22 billion all told. Substantial movement in price going on with Marathon and with ConocoPhillips if this merger comes to fruition. Now, as of the report that I read, that put the relative valuation at about $30 per share for Marathon Oil. But again, since it's not a cash payout you would expect to receive, $30 is not a fixed line. Rather, it's $30 worth of stock. And remember, what's happening to that specific stock that you might be receiving as a Marathon shareholder? Well, it's been moving the wrong direction and continuing that direction today, moving off by 4%. So it is a moving target to say whether or not there is still some value potentially in taking advantage of the special situation trade on Marathon, knowing it may go through a merger. But of course, anytime we have a large-scale merger going on, you want to ask yourself, is the antitrust legislation going to step in and say, you know what, that is too big, we can't allow it, it's going to impact competition and the ability of the free market to set prices effectively. As a result, we do know that there is a big difference here and still some question whether or not that merger will finalize, but nonetheless announced today and being taken on a relatively positive note for the acquired company, but the acquiring company, ConocoPhillips, losing a bit of its value as is expected when a merger is announced. All right, folks, that will have to end it out since we are already 1 minute past in terms of new information being presented. From to this moment forward, I will do my best to exclusively be answering these questions through the course of the session. So thank you very much for sending in your questions. If you have others, feel free to send them in now. I'll do my best to answer them. Let's see. Alan says that there's been Keystone said some pipeline changes out there in Canada, maybe going to impact Canadian oil companies. This study was exclusively US and multinational companies. So if there's Canada-specific ones on your radar, Alan, definitely worth taking a look and seeing how some of those are likely to move based on those changes in the pipelines. Ken points out that FSLR has been doing well. Here's this chart for it. First Solar, one of those energy companies, like I said, not actually part of the energy company, but a green-related energy, absolutely moving very high, very quickly, adding effectively 50% over the course of just the last few trading sessions. I always ask myself when I see it go up this fast, not everything that goes up must come down. But if it can go up this fast, please remember that it can go down at least this fast. We'll see where First Solar ends up, but if you've been holding that through that positive, well done on a fabulous trade. John says, has registration been posted for that Excel training? Yes, and June 24th is the date. Let's go ahead and pull it up and take a look. I believe that should already be live. If we go to fidelity.com/coaching is the website. These sessions are going to be under, I believe, trading tools. And if we scroll down to the sessions for the month of June, June 24th is what we're looking for. And indeed, here is our Ready to Excel class. Anybody wants to register, see how to build out that sector screener, feel free to join me June 24th at 2:30. Thanks, John. Hope to see you there. Lewis says the Trump jury is deliberating and waiting for a verdict. I haven't been able to follow much of that, nor am I much of a political analyst, so I will leave that to the experts in relation to it. What will it do to the market? Anybody's guess in terms of what it will do. Most notable in terms of Mr. Trump and impact on markets, you might recall when he originally was voted in that the first reaction was the market tanked substantially and then overnight rallied and instead was up substantially. So anybody's guess in terms of what will happen, even if you knew the outcome, the reaction in the market will be the aggregate of how people choose to react once that information is public. So Lewis, who knows? I really have no guess in terms of this. Let's see. Bill says, how does the president releasing oil from the National Reserve affect the market? That's a great question. The release of that is an increase to supply and therefore a depressive action on oil prices. It does bring down those prices potentially, or at least hopes to do so. However, then as an expectation for those oil reserves to be built back up by the country, if and when available, that does create some buying pressure. So now it's going to be pushing prices up. Again, the strategic oil reserve being opened and closed, definitely a political matter that I'm not going to touch with a 39.5-foot pole. But does the oil get sold to oil companies or direct to refiners? The oil companies are the refiners as well, Bill. At least many of them run their own refineries. And so definitely those are going to those major players to go ahead and get out into the market so it can be done. In some cases, it's also being sold overseas and all of it, but certainly the case. Mark, say, how do you add the sector info to that daily dashboard? Let me show you the clicks to do something like that. The daily dashboard has a couple great functionalities. One of them is that it's got this today's change, and you can choose to have it look at the holdings in your account. So here's the stuff in this account, or any one of your watch lists. All of this long list down here are watch lists that the strategy desk has put together over the years. Specifically, this sector spiders shows each one of these. You can create a watch list by coming up here to the top, clicking on quotes and watch list, click watch list, and then you use the link in the top right. Manage and then create new watch list. You'll simply fill in the ticker symbols. Go ahead and take a quick screenshot of this or jot them down while I leave it up in the background so you can go ahead and add these in. Monica, thank you. And Janice, good to see you. Thank you both. Let's see. Rashmi, let's see. Rashmi says, because they cannot raise their prices fast and demand will also be inelastic. Good question. The oil companies are usually able to adjust their prices relatively quickly in relation to the price of oil. They're able to do that usually relatively quickly. You may notice that at least on a weekly basis, the prices at your local gas station will be adjusted up or down on the basis of changing prices. They will tend to move in the same direction as the price of oil, though gasoline is not the same as oil, even though they are strongly related. We should all recognize there is a difference. Oil is what comes pumped out of the ground, crude oil. Then it is refined through a number of processes to extract the diesel, the gas, and all other different types from it as a result of that whole process. But they can move their prices. The demand tends to be inelastic though, Rashmi, so you're correct. Even if they raise their prices, people tend to fuel up their car because they are driving somewhere, not because they like the price of gas. You buy more of some things when prices are good. You buy the same amount when prices are good or bad, but you might whine about it. Oil is an inelastic good where price tends to be have a limited impact on the amount of demand. Kim says, where will the defense companies fall within sectors? Defense companies will show up. I'll show you jumping over here to our sector. If we come over to industrials, we'll find that here we have our aerospace and defense industries. This is where you're going to find those defense companies, your Lockheed Martins, your Northrop Grummons. It also will include Boeing, which a large portion of its business is not just those airliners that you and I might fly on if we take a pleasure trip, but it also makes many of the helicopters and other military equipment. Boeing is more stable, perhaps, than some give it credit for. But nonetheless, this is the sector and industry for the defense companies, Kim. Fernando, how would you look at the data if you included European Shell, BP, and Total? Good question. Those ones are an interesting selection. If we look, BP is, of course, British Petroleum. If we take a look at its chart over the course of the last year, it moves in similar fashion to what's happening each of them. If we take a look at what were some of the other ones, Royal Dutch Shell, let's see, RDS B, I think is the symbol. Maybe that's changed its symbol since I looked at it last. Royal Dutch Shell, but that's all right. And then Total is TA, I believe. Maybe I've forgotten some of my oil symbols. I thought it was just TA. That's all right. But these charts are going to be similar, especially if you compare British Petroleum, for example, to ExxonMobil. Each of those are large multinational companies. So even though they may call headquarters somewhere else, nonetheless, their charts are going to be relatively similar because of what they call the law of one price. If it's good for one of these companies, it tends to be good for others, and they'll have positive impacts. You're wondering about the Discord link does not seem legit. It is a legitimate thing. We do run talks on Discord. Specifically, Jonathan Lord, who you don't get to see very often in these sessions presently, still makes his appearances there in those weekly Discord talks, as does Andrew McGowan. I believe that's going on today as well. There is a link. I don't have access to the link presently to pass to you right now, AP, but hopefully you're able to give that a look. If it's questionable, feel free to go ahead and avoid clicking on it. I hate to say trust it when I can't validate the link you are looking at. But nonetheless, yes, we are running a Discord talk. Janice, tell the powers that be you need more time. Thanks, Janice. I appreciate that. I am the power that be in this one. I get tired. It's a lot of information to put together, but I love presenting it to you, and I expect to continue to do so. While on that topic of my own stamina and the fact that I am involved in this, folks, I do want to point out in 2 weeks and in the month of June, you'll notice that there is a little bit of a change to the schedule. We're going to skip the 19th. And I believe the 12th, we will be adjusting the dates on there. So be aware, there will be some adjustments from our typical Wednesday at noon time, partly because of a vacation. And then we also have some market closure impacting things as well. So I look forward to still being here, but through the month of June, the schedule will be a little bit more interrupted than in others. Take a glance if you wanted to make sure you join. But all right, it looks like that's the most of the questions. Let's see. There was a question on what's the difference between MRO and MPC. They are simply different companies. So MRO is Marathon Oil. MPC is instead Marathon Petroleum. So although they may or may not have any actual relationship, they are different companies. There has also been frequently in the news MARA, Marathon Digital Holdings. This has nothing to do with the energy sector, but rather is some sort of cryptocurrency adjacent holding. MRO is oil, and if we were to compare its chart with MPC, we can see even if we factor out this most recent move, the charts do move in some consistency in terms of direction, but are they the same? Absolutely not. You're seeing much more substantial moves in either direction showing up on Marathon Oil from its highs and lows compared to those present for MPC, Marathon Petroleum. Great information. Thank you very much. Kim asks, why does COP, ConocoPhillips, go down as a result of the merger? You can think of it like this. The two companies think they're going to merge because it's going to create synergy and it will be a better overall product. But the reality is that synergy tends to be overstated, and the market tends to believe that the company is buying is overpaying for the company it is acquiring. And as a result of that overpayment, it will lose relative market value. So it's essentially saying, I have 10 million, 10 billion, however many dollars you want to think about. Let's say, for sake of example, let's pretend it was $10 million. And they're going to buy something, but the thing they choose to buy, you look at and is only worth instead $6 million. They paid 10 and only received something worth 6. They effectively lost $4 million. So if that is your assumption of the relative values of how much they are paying and what they are getting, you would think that now ConocoPhillips is worth less than previous, and as a result, should be its market value should be decreased as a result. On the flip side, a little easier to understand on the acquired company since they are actually receiving the payment, and there you can simply compare the actual value of the payment offered to the value prior, and that's what causes the change. DD says, what's the difference? Oh, that was the one we already talked about. Let's see. Okay, it looks like we may have gone through almost all of them. Kevin says, is ethanol a component for the energy sector? Yes, oil, gas, and consumable fuels are going to include ethanol production. So great question on there. Many of these are going to involve ethanol as well, though I don't have a lot of detail for you at this time about how that relates to these major corporations. But yes, definitely part of that consideration. Um, It looks like there is a couple of you wondering about access to these Discord talks. I'm going to cease answering other questions, but if you are one who wants to get access to those, let me jump into the background, see if I can find how to get access to that link for you, and I will send that link to you as a result. Thank you so much for joining with me. If you're on your way, not interested in the Discord talks, feel free to head out. Thank you so much for being with us. I look forward to seeing you back here next week and each week for Jake Talks Sectors. This was all about energy, and we'll be jumping through more and more over the course of the coming weeks. Thank you for being with me. I'll see you again soon.